Hello everyone, welcome to Marathon Trades. Today we are going to talk about the Ichimoku cloud system. This is a trading system, trading indicator rather, which is to be used for swing trading specifically on the daily time frame. I'll show you everything that is to be done for uh, for using this for swing trades. First of all, you need to go to Trading View and choose the indicator and go to Indicators and choose the Ichimoku cloud system. Type Ichimoku and you will get it. Once you put it into the chart, you will see a very complicated many lines, and you might be very confused and understand nothing. It's fine. uh, when you understand the whole thing after seeing this video, it will be a very simple strategy which is very effective for swing trades. The Ichimoku cloud system is very effective. And first of all, let me go and clear most of it out and take each topic one by one. What you can see right now on the chart is the Kumo cloud. It is this thing which often turns green, often turns red, is the Kumo cloud. The significance of this cloud is that when the price is below the Kumo cloud, you can never take buy trades. When the price is above the Kumo cloud, you can never take sell trades, because when it is above the Kumo cloud, it is bullish. When it is below the Kumo cloud, it is bearish. So it acts as a filter that this is what's bullish, what's bearish. It acts as a filter and helps you trade in that manner. When the price is within the Kumo cloud, you should take no trades, because in that case the price is moving sideways and can go any direction. There's no such thing that it might not go bullish or might not go bearish. When it is within the cloud, it has to be avoided and wait for some breakout of the Kumo cloud. The next point which we are going to take is the conversion line, that is the blue line that you are seeing right now, and the base line, that is the red line that you are seeing right now. Conversion line and the baseline are basically 9-day. The conversion line is a 9-day moving average sort of thing, but it's not exactly a moving average. Moving average, when you are calculating a moving average, you are uh, taking it as let's say you are taking a 9-day moving average. In that case, you are averaging the last 9 days closing price of the stock, right? In this case, you are not averaging the closing price, but in case of the conversion line, you are averaging the last 9 days high plus low by 2, that is the last 5 days high and low average price. Okay, the high low mean you are considering for the conversion line calculation. It is sort of a moving average, but different from the usual moving average that we calculate. And that is why, since it is a high low average, you will often see that it is calculated as it is often going sideways, which a typical moving average will never do, right? And the baseline, the red line here, is the same thing, but for the last 26 days. The last 26 days calculation is done for the baseline, and the last 9-day calculation is done for the conversion line. So what is the significance of conversion line and baseline? When the conversion line is below the baseline, you should take only sell trades. It does not mean that you have to take sell trades when the conversion line goes below the baseline. That's not the point here. But you should not take buy trades when the conversion line is below the the baseline. That's again a filter, just like the Kumo cloud was a filter, that if the price is above the Kumo cloud, you should not take a trade. You should not take a sell trade. In this case, do you think you can take any trade in Nifty right now? As per the Ichimoku cloud system, you should not, because the conversion line has just crossed below the baseline, so it's bearish as per the conversion line theory. uh, but the price is above the Kumo cloud, so it's again, as per the Kumo cloud, it's bullish. So there's no proper decision as per the two indicators, so you cannot take a trade, right? The next thing that we are going to see is the lagging indicator, the lagging span indicator. The lagging span is nothing but today's price projected 26 days earlier, right? If today's price is, as per the Ichimoku system, if today's price is above the last 26 days period, you should take only bullish trades. If today's price is below, that is, if the lagging span is below last 26 days price, you should take only bearish trades. In this case, the lagging span is exactly at the last 26 days price. Last 26 days before was November 11th, and as you can see, Nifty was at the same level as it is today. So lagging span is at absolutely at the point where last 26 days Nifty was, right? So I'll show you something, a bullish trade. Wait a minute. Let us check HDFC. In HDFC, let us see. The price is above the Kumo cloud, so it's bullish. The conversion line is above the baseline, again it's bullish, and the price, the lagging span is above the price line, so again it is bullish. So HDFC is bullish from all angles, right? Does not mean that you should take a trade in HDFC right now, but it is bullish from all angles. Now we have discussed every single line that is included in the Ichimoku. Now, when should you take a trade as per the Ichimoku cloud system? You should take a trade only when the price crosses the Kumo cloud. Number one is, when the price crosses a Kumo cloud, you should take a trade. Okay. The conversion line should be above the baseline. Number two, the lagging span should be above the price, 26 day before price, it should be above that. And as you can see, the Kumo cloud is projected few days forward, right? It is projected 26 days forward. Now that forward Kumo, the forward Kumo, which you see over here, this should be bearish. Sorry, this should be bullish. In that case, you can trigger buy trade if the forward Kumo is bullish. So in HDFC, when could you have taken a buy trade here? Let us go to this point where the Kumo cloud was broken, because that is the first criteria that needs to be fulfilled for taking a buying trade. The Kumo cloud was broken on November 1st. The forward Kumo, as you can see over here, was green. It is bullish, right? It is above the Kumo, crossed above the Kumo. It is bullish. The forward Kumo is bullish. The lagging span is above the price, right? Lagging span is above the price. So first condition is met, second condition is met, third condition is met. right? Sorry, the third condition is met, and the conversion line is also above the Kumo line. So you can take the trade. You can buy HDFC Bank at this point. I mean, not at this point, but on November 1st, you could have bought HDFC Bank. And let us see what would have happened if you had bought HDFC Bank. Right. If you had bought HDFC Bank, let us take the replay. Sorry, what would your stop loss and target be? Let us define that first. You would have bought it at, let's say the closing price was 15.12. Your stop loss, mind it, would be below the Kumo cloud, and typically what works in Ichimoku cloud is a risk reward ratio of 2, right? So your profit should be 2 times your risk. If you had taken this trade, let us see if your trade would have worked or not, right? Let's play this. Okay, it was almost touched. It has not, it is still going on. The trade is still going on, but it has almost touched, right? At this day, which was 15 December, HDFC Bank almost touched our target, but still, if you still wait, it will be done. And as you can see, the price after it becomes bullish often tends to take a support at the conversion line or the baseline. In this case, HDFC Bank has been taking a beautiful support at the conversion line. So our trade would have been successful here. The next trade that I would like to show you here would be, I had Ion Exchange. Ion Exchange would be a good trade, and Ion Exchange, as you can see, is trading at a massive price, 2764. It has given a very good breakout, and the Kumo breakout happened on this day. It was on November 7th. At this day, the conversion line was above. As you can see here, the conversion line was above the Kumo line, right? Let me show you. Conversion line was above the Kumo line. The forward Kumo was bullish. The lagging indicator was above the price, 26-day ago price, and the Kumo was broken. Every single thing was bullish. So we could have taken the trade on this day. A stop loss of 187, and our target, if we take a 2 is 2 target of 2 is to 1, we get a target of 52562. Okay, and let's see how our trade would have turned out to be. Within 2 days it gave a huge run up, almost touched our profit, done. And even after touching our profit, it went up huge. I will shoot a video later on telling you what you can do to see even after a profit of 17%, or like in this case 17%, or sometimes even 20-30%, if you still should hold your trade or not. In Ichimoku cloud system, you will encounter many trades which will give you 20-30%, in a single trade in, let's say, a month or two, or sometimes in this case it took just I think not even 15 days. In this case it took, yes, 17 days. So after this, whether you should hold it or not, for that you need to do a price action analysis. Only depending on the Ichimoku cloud won't give you the answer to that. Ichimoku cloud system gives you an entry position, and whether to still hold it or not depends on price action. 2 is to 1 risk reward according, taking the Kumo cloud as a stop loss often works, which usually works most of the time, a very good win rate. But most of the time it, you will encounter trades where the Ichimoku 2 is to 1 risk reward uh, is set by you. You take the profits, but after that a lot of action happens. So what to do after that, I will talk about that. Before that, in another video, in this video let me show you some other trades. The next trade that I would show you is a very good trade, recent trade, LTTS. LTTS broke the Kumo, as you can see, on this day, but we would have waited a bit because, as you can see, the conversion line is above the baseline, but the forward Kumo is still bearish. The lagging indicator is above the price, but we will have to wait for this forward Kumo to turn green, right? So let's see. The next date was this. We need the forward Kumo to turn green, and on this day it happened. On this day we would take our trade. You might wait for a green candle as well, but I usually don't. But to be safer, you should, I think. Now let us see how this would have turned out to be, right? Just look at that move, guys. And again, see, look at that. Even after crossing your target, it went up. Even after crossing your target, it did go up. How much? It did go up 5% more. So you could have made that extra 5% if, but still, you should take a profit. You got a 10% profit here, which is extremely good. LTTS. And in a very few days, I think it was 21 days, yeah, within a month. And this is an F&O stock. So in F&O stocks you could actually expect great trades. This could have made you 70-80,000 rupees if you had invested, or 15 or 16,000 in it. So if you have bought an option for 18 or 15-16,000, you could have made more than 50,000 at least from this trade. And as it happened within a month, it would have been a great trade. The next trade that I would show you is Astral. Astral was again a good trade from the Ichimoku cloud system. Not here, but here. I'm showing you bullish trades only today because we're focusing on cash trades. If you want me to do short trades or futures and options, I will do it. But today I'm focusing on cash trades. As you can see here, Astral was a beautiful trade. The Kumo cloud was forward, Kumo was bullish. The lagging indicator was far above the 26-day price. The conversion line was above the baseline, and the expected profit out of it would have been 30%, around 30%, I think. 30%. Now This is a huge profit that you were expecting. And in order to expect this, you should do a price action analysis as well. And if you look at it, there has been a downtrend in Astral Poly, and this downtrend had been broken. So, and there have been good volumes that have been developing here. If you notice carefully, there's also two rounded bottoms that have formed, which are very good signs. So it would have been a good trade. 30% would have not been a very big challenge. As I showed you here, but when you are targeting 30%, please remember it will take time, right? It will take time. So let us play this. It did struggle a little bit in the beginning. And it didn't even take much time. Astral Poly, let me show you how much time it took. It took around, we gave 30% in a matter of 36 days, not even 2 months. Great, a month's trade and 30%. It was a massive trade, Astral. And for stock like Astral, which is like, it is a good stock. It has a great volumes, and yet it gave a massive run up. A very recent trade was Yes Bank. As you must be knowing, Yes Bank gave a very good move. Many retail investors had bought Yes Bank at 14, 15 and waited for a long time and maybe even frustratedly exited. But if you had followed the Ichimoku out system, you would have bought it here on this candle. Not on this candle because the Kumo cloud was bearish and the conversion line was just moving up the baseline. On Okay, on this day the Kumo cloud turned bullish, and taking a risk to reward of 2 points would give us a 15% target. Let us see how it went up. Okay, but after our target was hit, just look at the run up. After our target was hit, in the next 2 days, it gave a run up of almost 21% in 2 days, and our trade was 15% in 11 days. We waited 11 days for 15%, and after those 2 days, we would be like heartbroken, right? Why did we exit? So that's why I was saying you need to have a price action knowledge when you use Ichimoku Cloud. I will make a video of that later on. But if you don't have price action knowledge and you need to trade only on the basis of Ichimoku Cloud, you can very satisfactorily use the 2:1 ratio using the Kumo Cloud as a stop loss, and it will give you very good returns. The accuracy of Ichimoku Cloud for swing trading on the daily time frame is absolutely amazing. So a recap of this video: you should take buying trades only when the price crosses above the Kumo cloud. The lagging span indicator should be above the price. I mean the 26-day ago price. The forward Kumo should be clean. The conversion line should be above the baseline. In that case, you should buy the stock or the option, whatever. You should buy it, and you should exit after a 2 is to 1 target has been achieved. Or if a stop loss has been hit, you should take your Kumo cloud as a stop loss. If your price moves below the Kumo cloud, you should stop loss. Right? Not within the Kumo cloud. If it runs below the Kumo cloud, you should stop your loss. In that case, it would be somewhere around here, right? It would not within the Kumo here. So this was the video. I showed you many examples. This is an extremely good swing trading strategy. You can start using it. You can start plotting. If you get any good trades, please let me also know in the comments. And yeah, this is the video. In the next video, I will be showing you how you can use two other indicators to better your accuracy, and how to use price action to know whether you should hold on to your trades even if 2 is to 1 ratio has been achieved. So that's it. Thank you.